Today we'll be revisiting the EV battery sector. We know that the electric vehicle transition is here and now, and there's a lot of excitement and anticipation about what ASX EV battery stocks could provide exposure to this mega trend. Last week, we looked into 5 different companies across 5 different sectors that investors were interested in, and today we'll be doubling down for a part 2. We'll initially start with an overview about the electric vehicle sector. We'll talk about some numbers and some insights about the transition and the pace of this trajectory. And then we'll flow through into 5 different companies, playing into 5 different industries. As you can see here, as diverse as the rare earths to graphite, from a lithium developer to lithium ion battery manufacturer, and then a company in the project development space, providing exposure to a breadth of battery materials. It's a fascinating video. Hope you look forward to it. We know there's been a lot of excitement about the sector, and at the end of this one, we'll throw in a link to the last video if you missed out on it. So before diving into the 5 different ASX EV battery stocks to watch, thought it made sense for us to take a bit of a step back, have a think about the electric vehicle market, look at some numbers and really get our head around the current context and the state of play. I think most people would know now that we've seen a significant acceleration over the past few years towards the EV adoption. The battery prices have started to come down. There is now starting to reach a critical mass, and the development of a range of infrastructures as well to support the industry rollout is starting to really flow through. As we can see here from some of the numbers, however, this is for new vehicle sales across the cohorts. Vans and trucks in 2021 was only 1% EV share. Passenger cars, which many use as a proxy for broader stream rollout, as this is really the consumer-focused end, was only 4%. It was under 1/20th or under 5% of the total sales. Buses and 2 and 3 wheelers really were the leading lights there. We can see that both of them made up over a third of the sales of new vehicle sales in 2021. However, they're still a long way off total EV penetration. And so then having a bit of a think about that, we then have to start to understand what are some of those key enablers that will help to facilitate this broad-based rollout. I think first and foremost, as we mentioned, there's falling lithium ion battery prices. The prices from 2010 to 2020 absolutely cratered as new technologies, new manufacturing processes, greater understanding and new market entrants helped to bring those prices down. It's quite interesting to see in 2021, for the first time in a decade, the prices actually moved back up. But of course, that had more to do with the underlying commodity prices and the supply and demand dynamic than anything else. It is worth noting as well that there is a necessary development of supporting infrastructure. This goes to the technology. This goes to the policy lens. This goes to the actual roads and the transport systems themselves. Of course, there's a broad-based understanding that's going to be necessary. If you think about things such as charging stations, the necessary electricity to help to facilitate this transition, all of these are contributing factors. And as we start to reach a critical mass, it's really going to help to catalyze further growth for this EV rollout. And then as we really understand, there's been a growing focus on ESG. This is playing out into many different sectors of society, whether it's corporate companies that are having more ESG and CSR initiatives embedded into what they do, whether it's a broader based understanding and discussion at a national and global level about this climate change transition and how we're going to help to facilitate this, with also the understanding about the need to really have an orderly economic transition on that front. But all of this understanding and having governments willing to invest in time, capital, resources, and really start to develop out the policies that will help to accelerate this transition to EVs, it means that this adoption is in the here and now. And consequently, as a result of that, there's a lot of eyes on which EV battery stocks and which stocks within the EV battery supply chain can help to facilitate this transition. If you do enjoy this video, don't forget to hit the like button, make sure you've subscribed and turn your bell notifications on. You won't miss any of our daily episodes and we'd love to have you join the community. And so then, stock number 1, it's Magnis Energy. ASX M&S are developing out a vertically integrated lithium ion battery supply chain. Their flagship development is with their IM3NY battery factory. It's now developed on and brought on semi-automated production, but they're moving towards bringing on fully automated production in the first half of 2022. There's obviously a lot of eyes and excitement about what that would mean for the Magnis story. They've recently passed the 50% completion mark, just reported a 57% completion mark. However, as part of that broader vertically integrated supply chain, they're also developing out their Natru Graphite project. This is located in Tanzania. They recently announced an offtake with Traxys, and as a result of that, there were some condition precedents that they're now going about developing and filling out. The BFS is one of those, which is going to be underway over this next period, and investors are going to be looking at that Natru Graphite project and starting to price in how much of that can actually flow into the M&S valuation. Of course, they have a 10% equity stake in C4V, which is a battery technologies company. They've actually licensed out the battery technologies for IM3NY. And there's going to be a lot of eyes on the ability for Magnis to bring on IM3NY for fully automated production, but then how fast and to what scale they can really scale up. They've got ambitions to reach 30 gigawatt hours and above that, so there's going to be a lot of eyes on the M&S story. Finally, I think underpinning this Magnis story, along with many other companies within the North American supply chain, is there's a strong US focus on localized supply chains, and particularly for many of these minerals that have been deemed as critical minerals. And so as a result of this, there's going to be underlying support, potentially government investment, and government support to really help to bring these projects online moving forward into the next decade and beyond. And then stock number 2. Firefinch, ASX FFX. They've got two sides to their offering. They've got a gold mining project called Marilla, formerly known as Marilla the Gorilla. And then on the other side, they're developing out their Goulamina project, which is a 50-50 JV with Ganfeng, one of the leading lithium chemicals companies in the world. So starting on that gold side, Marilla the Gorilla, they actually bought that gold project for just under $30 million US from Barrick, and it's quite a significant project. For anyone who's familiar with it, it was a significant producer, and it has a great opportunity. Firefinch still want to continue to do further exploration and see what other opportunities lie under the surface, but they're in the process of really scaling this up now. They're targeting 100,000 ounces in the coming period, and then looking to really scale up to 200,000 ounces in 2024. Then on the other side for ASX FFX is their lithium business. They're currently in the process of demerging this business, so there will be that demerger, with Leo Lithium becoming the new entity. They've got the approvals in place. They've just recently released their DFS and consequently approved the final investment decision. So they're just now waiting to finalize everything, wrap it all up in a bow, have the demerger for Leo Lithium, and then move towards ultimately construction. And then they're hoping for production due in 2024. Stock number 3 is Talga. It's ASX TLG. Talga Resources is building a fully integrated battery anode supply chain, which centers around their flagship Vittangi Graphite project. So what's worth noting about Talga is the Vittangi resource is a world-class resource. You only have to look at any of their recent results and any drilling results. It is a top-tier resource. The scale is absolutely massive, and so if they can bring it into production and feed into their vertically integrated supply chain, it is a great opportunity. And this will be centered around their Swedish anode project. They're moving towards their EVA qualification plant construction, hopefully online in the not too distant future, bringing the completion and then ultimately commissioning in Q1 2022. This will also help them to facilitate further commercial discussions and further qualify their product to customers, and that could lead to offtakes as well. Mitsui and Talga have extended their MOU discussions. There used to be 3 parties to this, but LKAB have pulled out, but Mitsui and Talga continue to do this discussion. What's interesting as well about Talga is they're also looking to further development for graphene, which they see as a huge opportunity in years to come, and then also next-gen battery technologies. Talga has definitely been clear and definitive that they're not just a mining company who will be extracting product, but what they really want to do is be a battery technology company going all the way through into battery anode downstream. And so this is a great opportunity moving forward. Talga is awaiting critical permits and approvals. It's what's led to a little bit of uncertainty about Talga in the near term, but all of this should hopefully be resolved over the next 6 to 12 months. And so there's a lot of eyes on the Talga story and what that resolution may end up looking like. Stock number 4 is Vital Metals. ASX VML are playing in the rare earth space. They're actually quite a pioneer in the North American space. Vital Metals is Canada's first rare earths producer and only North America's second rare earths producer. As we know, the rare earth production is currently very concentrated in Asia and in China, but with a broader diversification of supply chains, Vital Metals are hoping to feed into that. Vital have recently completed their maiden 2021 mining campaign. They're now undergoing a pit redesign after their ore sorter exceeded expectations in terms of the grade of the ore that it could sort. Along with that, they had some interesting discoveries along the way for this campaign. They're now finalising the construction on the Saskatoon rare earths facility, which will mean that they can move towards further processing and ultimately their first significant revenues in the middle of this year. Vital are also looking towards the heavy rare earths opportunities, and their objective is over time to be the world's first commercial scale heavy rare earths and light rare earths producer. So it's quite an aspirational opportunity. Obviously the start for Vital Metals was really focusing on that North T project. It was to get into production and then to be able to cash flow the rest of their projects. They've got a major Tardif project as part of their Nechalacho project, and then obviously they've now got their heavy rare earth production opportunities to look towards, as well as Wegu Hill in Tanzania, which investors are waiting to hear some more words about too. And then Neometals. ASX NMT is quite a fascinating company. They've had a transformative past few years, really transitioning from more of an upstream focused company into a project development company with an eye on really helping to bring down the embodied energy and the carbon emissions across the sector, really feed into a circular economy. They've got projects across a range of different opportunities in the EV battery supply chain. Really, their flagship project is on that lithium ion battery recycling side. But as you can see here on the right, it covers the lithium ion battery recycling with their flagship project in Germany, looking to come online over this next period. They've got a vanadium recovery project also in Europe. Their Eli lithium hydroxide project, which will be in Europe too, but it's quite an interesting take on it all. And then they've got their Bramby titanium project as well. I think just having a little bit of a think about their lithium ion battery recycling project initially, they're looking to bring online a 10 tonne per day commercial plant and then ultimately scale up to 50 tonnes per day as well. The opportunity that they get is to really retrieve many of these key resources that we're all familiar with: nickel, lithium, cobalt, and then graphite from the anode. They've got a JV with SMS called Primobius, and what this helps to do is it helps to facilitate a global rollout. Obviously, SMS is a leader in the global space. They help with the engineering, the building, the development of it all. But they've got now, within this JV, the ability to really scale this out. There's discussions with Stelco over in North America, as well as the opportunities in Japan. And I think what's really interesting about Neometals is they've now developed these technologies and their processes. They've got quite a diverse and broad range of outcomes in terms of route to market. Do they look to develop it themselves in-house? Do they look to license out the IP? Do they look to charge fees? What's the way that they will pursue the market? Really, it's all opened up to them. It's going to be really fascinating to see how they scale out moving forward. A few kind of near-term focuses for Neometals. They're looking to finalise their listing on the AIM as part of the London Stock Exchange, hopefully in this first quarter of 2022. Neometals, of course, have got a focus on partnerships and JVs. It means that they have the ability to get exposure to a range of different projects, and they can use their capabilities in-house to work with other companies that are quite complementary to them. And then just thinking about their Eli lithium hydroxide initial project, it's looking to leverage electrolysis. And as we know, when electrolysis leverages renewable energy, of course, the carbon nature of the project is very low, and they're hoping to be able to develop and produce out lithium hydroxide from that. They've actually evaluated both on brines and hard rock feed sources, and it means that it could help to facilitate companies who maybe are just focusing on that earlier stage. Once they get to a concentrate stage, we know a lot of companies are looking to build out vertically integrated operations, but these are more capex heavy, they're more time heavy, you need different sets of capabilities. So potentially Eli could help further on that downstream once you have the concentrate or the lithium chloride. It's an early stage one. They're looking towards having the final investment decision and studies done in the second half of 2023. There's a lot of different moving parts that make the NMT story interesting. I'd love to know your thoughts on it all as well, so drop in a comment below what you think about the EV battery material space, which companies you've got your eyes on for 2022, and if you did miss last week's episode, we'll leave a link up above to our first 5 ASX EV battery stocks to watch for the year up ahead. Of course, a standard reminder, as you guys know, I'm just a bloke on the internet who loves talking about stocks. I'm obviously not a financial advisor. None of the stocks are buy recommendations. Hopefully it is, however, an interesting starting spot for you to go away and do your own research from. Thank you so much for joining us. For now, stay well and happy investing.